Welcome back. Futures this morning are selling off. Take a look. We are expecting a decline this morning of about 370 points on the Dow Jones Industrial Average. That's down 0.75%. The S&P is down 40 points, and the Nasdaq lower by 0.2%, down 159 right now. This after all three major indices rallied yesterday. In fact, at the close, the S&P 500 and the Nasdaq finished at fresh record highs. Even as the U.S. extends the ceasefire with Iran, the Dow was up 340, the Nasdaq was up 397, and the S&P was higher by 73. This morning, stocks are pulling back from those record highs as oil prices right now trade higher. Take a look. Brent is above 100 again, up 2% at 104.01, and crude oil is up about 2% at 94.84. The U.S. blockade in the Strait of Hormuz in place as the Navy moves to cut off Iran's oil exports. Even after Iran reportedly fired on 3 ships trying to pass through the critical waterway. President Trump says he's under no time pressure to end the ceasefire, telling Fox yesterday the blockade scares them even more than the bombing. The U.S. awaiting a unified proposal from what the president said is a, quote, fractured Iranian government. Joining me now is JI Financial Strategy CEO James Iuorio. James, thanks so much for being here this morning. It's amazing to me that even in the middle of this conflict, stocks have been hitting record highs.
Well, that's a big deal. And yesterday was a huge deal in this whole saga because it was the first day that crude and the stock market meaningfully rallied together. Crude was up about $3, another $2 this morning, and we're only down a fraction. So to me, that's the stock market always displays this amazing ability to get used to a situation. Now, that getting used to a situation at $95 a barrel is probably a lot different than 105 or 110. So right now, as far as yesterday goes, we could concentrate on the bigger story of, the AI build-out story, the replacement in the Mag 7 for things like AMD and Micron, so it's broadening out. But the oil thing is interesting. And again, the news coming from the Middle East is obviously chaotic. And the only thing that actually matters to me is price now, because the price of crude is a discounting mechanism in real time. And at 95, I think what that's telling me is the market still believes that 3 weeks from now, there's a 50-50, maybe 60-40 chance that this thing is mostly resolved. And the stock market is taking comfort in that belief. Again, there's still a big risk premium in crude. If we start shooting higher, I think it could break things up a little bit. But right now, I thought that was a big positive for the stock market yesterday.
So would you want to put money into oil today? Do you think oil, or do you want to buy the oil companies? How do you trade around this move?
Yeah, if the picture looks good in oil, I would be buying the oil companies. At the beginning of the year, my 2 big trades for the year was Russell over Nasdaq and crude. But my reasoning for crude is not exactly, I didn't have supply disruption in the Middle East as part of it. It was just an economic tailwind story. And I think that story is still intact. So, but if I'm going to trade crude now, and even the names, it's going to be in small size. It's obvious that it's highly volatile and a lot could happen, and a lot could happen quickly. I'm still mildly positive crude. I think this level will stay. Again, if it goes above 100, it starts breaking apart the economic story, which is intact right now. So I guess the chart looks good on crude, but the price is high, if that's an answer.
So what's your take in terms of the broader market here? And President Trump is reportedly nearing a rescue deal for Spirit Airlines aimed at keeping the struggling discount carrier afloat. This proposal would include up to $500 million in government financing in exchange for a potential 90% stake in the airline. James, your thoughts?
Well, as a libertarian, I have very mixed emotions about this. I completely understand his thinking is that this is a temporary shock, a lot of it caused by oil, that part of a grander plan that hopefully he's right about. So I understand him thinking it's not particularly fair that a specific company like this gets punched because of it. So I understand his thinking, but I'm completely mixed on it. I don't like a government that comes in and cleans up messes that the market says they created on another. But again, I'm not saying this is just particularly handicapping this from someone whose needle, I hope, points straight up. I hope that this works out in the Middle East and crude comes back down to $70 a barrel within the next month. But Spirit Airlines, again, this is part of the whole K-shaped economy. It's a lower income airlines. Those people were stretched already. Spirit doesn't believe they have the pricing power to price in the crude, and therefore they're in trouble. If it works out, great. But the libertarian in me is going to have to take a hot shower after saying that.
Yeah, no, I understand. I mean, look, this administration has been very creative in terms of how it's dealing with things that they deem are national security, like taking a 10% stake in Intel, telling the defense companies that they need to, put dividend payments aside and focus on mass production of weapons right now. But when you look at a company like Spirit, this company is grappling with bankruptcy. It's facing rising fuel costs, pressure on the low-cost business model right now. Are there areas of this market that you would put new money to work right now?
Yeah, I'm actually looking at Virgin Galactic right now. I might be buying something today. I think the airlines were beaten down pretty good, and my base case is still that the situation in Iran rectifies itself within the next 3 weeks. So I do think there should be some areas to buy. I don't think Spirit is one of them. But remember, for the whole entire picture, Spirit is less than 2% of the miles traveled in this country. It's not a huge airlines, but I think the bigger point is that, well, there's 14,000 jobs involved with it too. But the bigger point is it really underscores the K-shaped that's been going on for 5 years, that hopefully lower oil prices and the end of this will help quite a bit.
So what are some smart investment strategies our viewers might consider to best position their portfolios right now? Look across the board, whether it's fixed income stocks and other alternatives. What do you think?
So I actually think that 10-year yields are going higher, and they popped higher today, he said, and I think that's part because inflation expectations are going higher as long as crude stays higher. But more than that, I think the 10-year market is saying that there's a lot of bonds have to be sold to support conflicts that are going longer than people think. So I don't want to be involved in that right now. I do think the stock market looks pretty good. I'd love to see the S&P come back down to about 7,000, gather some steam there, and then shoot higher again. The non-traditional Mag 7 plays still look good to me. AMD and Micron look good. Now, there's another thing I'm looking at is that gold. EJ mentioned something. We were talking about swap lines before, and we have to mention that a lot of gold has been sold by countries who are trying to, they had it on for a chaotic moment, and the chaotic moment is here. When that gold selling is done, I want to be a buyer again, but it's not quite done yet.
All right, we will leave it there. James, great to see you. Thank you so much. James Iuorio this morning.